Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Wright Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, good evening, good evening to everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not the first time tuning in to Tim's Tidbits, hey, let me see what this look like over here. Hold on. All right. Let's get this here. If I move it this way, what happened? Putting me more in the middle. All right. Now, good evening, everyone. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not the first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty. Well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr. No, I'm not the man of steel, a.k.a. Rania Grande. That just means big spot if you don't hablo español. And you're in tune to another episode of the Intraday Price Action Recap. Shout out to everybody that's in here, man. We kind of slacking here today. I guess people got other things to do. We got Joe in here. We got Deborah in here. We got G Ferg in here. We got Here to Learn and Share in here. We got Kim up in here. We got Seawalk up in here. Them all the names that excuse me, the birthday cake milkshake came back with a vengeance just then. I got a birthday cake milkshake from Zaxby's. I just finished it not too long ago, probably about 10 minutes ago. Came back with a vengeance just now. Hey, man, did Price do anything today that caught you off guard? Did Price do anything today that caught you off guard? Did Price send anybody to the reset line today? Speaking of the reset line, Apex, today is the last day to get any eval for 90% off, but they extended their discounted PA fees through What day was that I shared in the Discord? Did anybody see that? What day was that they shared? They sent out a message today. Let's go over there and look together. Since everybody be acting like they don't know what I'm talking about. Everybody be acting like they don't know what I'm talking about. They don't want to tell them I don't know what you're talking about, man. Through the Sunday. So if you today is the last, today at 11:59 is the last chance you for now that you can get all the evals for 90% off. Right. I got a link in the description below with a code. I don't have a fancy code. You got to use that little weird ZW, whatever that say down there. Use that, right? Support your boy. You know what I'm saying? Buy me a cup of coffee when you use that link down there. And you buy them, you can stack up on them now, right? You can get like a 50K account for like $19.60 right now, right? And then if you pass it by Friday, right? If you pass it by Friday, okay, so you got tomorrow, Thursday, and Friday. You got 3 days, right, to pass the eval if you buy it today. If you buy it now, you got tomorrow, Thursday, and Friday to pass it, and then you can still pay the discounted fee of $65 if you get 100K or lower, or $125 if you get above 100K, right? So $84.60 all in for a 50K account, 100K account, or 25K account, right? They extended the PA discount. Got a discount fee for the PA is only good while the sale is going on. Now, when you buy the eval for 90% off, if you buy for 90% off, then if you don't pass it within a month, it renews at 50% off. That's what this sale is offering. I'm 90% off for the first month, and then 50% off each additional month that you require to hold it if you don't pass it within the next 3 days, where you can get that discounted PA fee. All right. Now back to price. Did price do anything? My shirt is like really like it scratched my neck. I don't know if my neck is just irritated or if it's something inside the collar of this shirt, like some stitching or something. I don't know. But it's like driving me crazy. Driving me crazy. Anyway, um, let's go ahead and get to the price, man. I don't see nothing in the chat. Ain't nobody speaking up. So I guess don't nobody need no price action recap, because price ain't catch nobody off guard. It ain't do nothing unexpected. So that means price did exactly what everybody expected. So y'all don't need me.
Hey Tim, I missed the trade. I mean, I messed up on the trade today. It was setting up real good, but um, I missed the breaking market structure. I mean, not the break. Well, the swing low. It was at the 2 o'clock hour on the 1 o'clock on the 1 minute chart where
Okay.
price hit the
Let's back up for 1 second. You said
yeah
you messed up on a trade. What you mean you
yeah.
messed up on a trade? Like you broke a rule? You like what happened?
It was setting up real sweet, and but it didn't hit the breaking market structure.
Okay, let's back up
Yeah.
again. Like you're doing me like my kids do me. You said you messed up on a trade. Did you break a rule? Did you like what made it be a mess up? You said you messed up on a trade. What made it be a mess up? Did you just FOMO in? You didn't follow your rules? You broke a rule? Like what? Like what made it be a mess up?
I see where it went wrong on me because I didn't see where it didn't break market structure.
So you didn't wait for your rules to play out. You just got in premature.
Well, you had to see it, and then I mean,
It's
you
your,
had to see it.
it's your rules. I'm asking
I
you.
just
Like, I can't, and no matter what I
hey,
see, I'm asking you about your
hey,
rules.
it hit it. Look, it took out the high, and then it went up and took out the high again, and then it created. Uh, yeah,
So
yeah. It
what
looked good.
made
It,
it?
it
What
looked
made it a
good, but it
mess
ain't.
up?
It looked good. I think I was wanted to get a trade in. You know what I mean?
Okay, okay, okay. We
Yeah,
getting somewhere now. We
yeah,
getting
yeah,
somewhere now.
yeah.
So it wasn't your typical setup that you would trade. You
Mhm.
saw something that you like and you decided to dabble, and it didn't go in your favor. Am I on the right sheet of music now?
Yeah, it was, yeah, yeah. You're right. You're right. I'm gonna say that. All
You
right.
said clock hour. You said it in the 2 o'clock hour
at
now.
the, at the 2 p.m. on the 1 minute candle, it took out
Uh-huh.
the high at 25,803 and 3/4, and then it
Uh-huh.
took it out,
Is that buy side that I got marked out right there. All right. It took it out, and then what?
and then you know what I'm saying. I see the high probability fair value gap, so I marked that. I said, okay, it's looking good right now. And then it
What was you
came down.
doing? You was
Huh?
going short, or you was going long?
I was going short.
I don't see nothing. I don't see nothing in any of this area right here that says short me. No, let me do this so
All right.
we can't have hindsight bias. I don't see nothing right there that says short me. There's nothing happening right here that says short me. Right? Right
Mhm.
here, the only thing that says short me right here is somebody that's thinking, oh, we've just taken out buy side. We're super extended. We got to pull back. That's the only thing that's saying short right here. Right? This Sibby right there, right? This is not saying short me. Right? That's not saying short me to
No
go
displacement.
any type of great distance. Right?
Right.
And why is that? Because this
No
Sibby right
displacement.
here, this that too, but this Sibby right here, where's that located? It's located inside of this range right here, right? It's located inside the range. So when we created that Sibby, the market still hasn't shown you a desire to want to go down. It still has not traded. It hasn't displaced through this low. It hasn't even taken this low when you created this Sibby right here. So this Sibby is still inside this range. So technically, this Sibby is not a fair value gap. It's just a imbalance. It's just a sell side imbalance inside of this range right here. That's all it is. We're inside a range where the market is just efficiently delivering price, right? So we're still just engineering liquidity right here. Yes, we're in a
Yeah.
premium. Yes,
Hmm.
we're treetop tall, but the algorithm has, excuse me, has not given us any indication, even on this 1 minute chart, that it wants to go up or down at this point right here. So if you selling this right here, right? Did you sell this Sibby right here?
Yeah. Yeah.
Okay. Now let's look at this on this 1 minute chart.
I mean, I
Right.
know I messed up, man.
All right. On this 1 minute chart, we come down. We don't have a change in the state delivery.
Mhm.
Right. We don't have an inversion down here on the first imbalance that displaced away. We don't have a break in market structure at all when this is formed. So shorting right here is way premature. Right now, if you just try and take a quick scalp, right, from there back down to there, ain't number about 5 or 6 points, but there's nothing right here that's saying short me at this point right here. Right, there's nothing right there that's saying short me at this point right here, because when you look at what price has done right here, once it creates this, only thing we've done is come here, drop down, expand up, then retrace back down into this suspension block right here. It just came back down into the discount there when we created that. Right. So then we go back up into the order block, and then we pull back down again. But as we're pulling back down, right, no displacement at all. Right. We have no, after we traded back up into the order block, no displacement at all. All right. Yeah. So that was just
I
wishful thinking.
realized what I had did 5 minutes into it. I was like, man, it didn't even break market structure. I must have been distracted this morning.
That's actually this afternoon. So
I mean, this afternoon, brother.
yeah, you was wishful thinking. You forced that one. You forced that.
I did.
All right. Sometimes we can force it and get lucky, right? Because look, you know what I mean? We're treetop tall. We well up here in the premium. All right, we're well up here in the premium. And you say, hey man, it's gotta pull back. It's gotta pull back. We say that all the time. Can you explain why? I see something said, can you explain why? Can I explain what? Not here to learn to shit over that turtle typing now. You just explained it. Y'all know when y'all be typing in the chat, y'all know what I beat and said. Right? Y'all know what I beat and said. But if you go like type a question like, can you explain why? Type in the question what the type it like what the question is. Can you explain why that wasn't an opportunity to short? Because when you just say, can you explain why? I don't remember what I said 5 minutes ago. Right. And then I got to be like, explain what? Then I got to see here with that awkward look like this right here. See how weird that feel? Hey man, shout out C Walk for pulling up and sharing the I'm gonna force the market to do what I wanted to do trade that he took. Can't force the market to do what you want to do. You gotta wait for the signatures. You gotta wait for the signatures. And oh my goodness, y'all look at this. Look what I just noticed. Y'all see? Do y'all see these magical boxes I got drawn on my screen right there? Y'all see these magical boxes? Hey, y'all know what? People be think I be sweating. Hey, people be people be thinking I just be talking stuff. People think they be like, here's another ICT trader with all this hindsight stuff. You know, people think I be swelling. People think I don't know what I'm talking about, right? They be funny to me because I really don't care. I don't care if people think I know how to trade or not, but sometimes I just like to poke the bear, right? And like, let's see if we can poke the bear a little bit today, right? Uh, for those in the Discord, did anybody see what I posted in the screenshots channel today in the Discord? Hmm. Let me open up this right here. All right. So come over here in the screenshots channel in the Discord here. It says Good morning, everyone. Remember, let me squash this up so it can show in the vertical. Make sure the vertical can see it. It's delayed, so it'll be like, all right. It says, good morning, everyone. Remember, only annotate PD arrays that are created with an algorithmic purpose. And just watch the magic that happens when time meets price. There's no such thing as an algorithm. And if I open up my charts, right? Open up the chart that I shared. Okay. If we look here, we notice if we zoom out, right? See how price came down, right? Went up, pulled down there, went up, pulled down there, went up, pulled down there, and we're right around that area there, around that little green box at the time when I shared this, right around that green box right there. And this was at 11:40 a.m. Now, if we go over to the chart, does this look vaguely familiar? Does this look vaguely familiar? Price came down here, went up, came down. And remember, we were right around that green box right there. At 11:40, this is around 11:40 right here. So price was right around this area here. 11:40. But look what it did. It dropped down. For some odd reason, it stopped at this magical red rectangular shape right here. Then it went back up above the green box. Then it came back down around this other magical red rectangular shape in here. That's right there inside the middle of that green box. Then it went up and it stopped at that black line right there. And then for some reason, it kept going all the way up until it got into this magical green line up here. And then it just hung around that little magical green line, like for the rest of the day. I don't know why it was so attracted to these little rectangular shapes that I drew on the chart, but for some reason it was. I was highly attracted to those levels. Let me think. Let me think. Could it be that there's something that's being taught out there in secret that no one knows about? Could it be that I got some insider information? Could it be that I got a crystal ball? Or could it be that there is a very strict sequence of coding, algorithmic sequences, if you will, that the market follows, and it repeats certain things over and over and over and over. And if you learn to identify them, then you too can prevent forest fires. I mean, that's smoke in the bear. That's smoke in the bear. Then you too can select very accurate price points that the algorithm should do something at these points, right? You will know that if price has taken liquidity, but it hasn't given me a break in market structure, I should not be trying to force the market to turn around. Sometimes we learn the lesson the hard way. And sometimes we get lucky and think that we're big and bad until we get humbled. shout out Seawalk, y'all, for having the courage to say, hey, I took a messed up trade today. Hey, man, let's go. This right here says, 5 minute. This right here says 1 minute. This right here says 1 minute. And this right here says 5 minute. That right there says 60 minute. A spasm in my back. That right there says 15 minute. All right. So let's start at the 60-minute chart. Right. Do I have a bunch of PD arrays marked out on my 60-minute chart? All right. Counting the lows, the highs, and the inefficiencies, how many different PD arrays do I have marked out on my 60-minute chart? Let's see. I have
5.
I have a daily low. I have a sell side liquidity for the overnight low. I have a daily high. I have buy side liquidity. So 1, 2, 3, 4. And then I have a 1 minute fair value gap. Oh, I got a new day opening gap right there. New day opening gap. So there's 1 outside of the new day opening gap. I have 5. Counting the new day opening gap, I got 6. Right. Counting the highs, lows, and the inefficiencies. Right. So I don't have like a PD array orgy going on right here. Right. Don't have a PD array orgy going on. Okay. You can mark whatever you want to mark, but understand, whatever you mark, you want it to be important to the narrative, right? You want it to be important to the narrative. You want it to be something where when price gets there, it's going to help you confirm or invalidate your bias or narrative. Don't just put it on there just because you see it, right? Now, it's plenty fair value gaps on this screen that I could mark out. Plenty. But the only fair value gap that I have marked out on the 60-minute time frame is this 12 p.m. SIBI from Monday. That's it. That's the only PD array I got marked out. Price opened up right here for today's trading. For Tuesday's trading, price opened up right here. So when price opened up here, right, this is what the chart looked like. Right here. The chart looked like this when price opened up. So at the time that price opened up, this wasn't on the chart because that didn't exist yet, that low, right? So all I had was the daily high, the daily low, and that SIBI, right? I put this buy side up there once I started prepping my chart this morning, right? Because that's the external liquidity outside of the daily range that I'm looking for, that I was looking for this trading period here, right? That was my draw on liquidity, right? That was my draw on liquidity. Why was that my draw on liquidity, right? What do we talk about over here? What do we talk about over here? we said that if we had already taken out this high, this right here would have been confirmed to be what? Talk to me.
Money reversal.
Nope. What was that right there?
Oh, that's the low risk buy.
That's the indication of a smart money reversal on that one.
Yeah, that's your smart money reversal. So if that's your smart money reversal, right, when we come down here, we're anticipating this to be our low risk buy, right? We said since this low had not come back up and taken out that high, then we didn't have the confirmation of the low risk buy. But being that we're on the right side of a market maker buy model, we're anticipating this to act as the low risk buy. So if we're anticipating this to act as the low risk buy, then we're anticipating this drop down there to be the start of what? He's one of the Migos.
Offset accumulation.
Offset accumulation, right? Because we're looking for the accumulation or consolidation on the side going up, an attack of the sell side liquidity that was engineered, right? And then it move back above here, and that will give us our price engine model of offset accumulation, and then complete the process. So since we're anticipating this drop down to be manipulation, right? As we start to move back up, right? We're looking for reasons to stair step up our dealing range to move out, because these quadrants here are the quadrants for that dealing range right there from yesterday, right? So as we came up yesterday, right? Remember, we had a dealing range based off of Friday, right? So if we, let's copy this over here, right? Because you always want to remember where you came from, where you came from, where you came from. So when we look at, right, now this, get out of here, yesterday's dealing range. So when we look at Friday's dealing range, okay, when we opened up yesterday, what do? Came up. Remember, we talked about this, right? This is the lower quadrant, because we came down and we started making this low. When we made that low. So now, once we made that low, now we know that we anchor it like this to make it easily visible, right? So everything from that low this way, right? You're looking to see if the algorithm will use these quadrants as resistance or support. And since we're bullish and we've dropped down into a sell side liquidity pool, right? As you see here, we come back up and we close right there at the lower quadrant, because this is the low down here. I don't have the low shown for those who can't readily identify it in their mind. Let me show the high and the low, right? That's the low, that's the high, right? High, low. Okay. And notice the buy side that I picked out right there, right? What is that buy side that I picked out? That's the high of what? What is that the high of?
That's the high of what day is that?
That dealing range right there.
That's the dealing range high from Friday.
Yeah. That's the high of that dealing range. This price action right here, right? This price action right here, we started utilizing this dealing range to stair step up this quadrants, right? And when we got to the upper quadrant, what do we say? We got a little bit of a deeper pullback. So what are we anticipating? We're anticipating price to come back down to this equilibrium, maybe come down into a discount or something. Got an order block over there, all kinds of support. Yeah, what you said? Come on, now.
Sorry.
All right. And then attack the external liquidity. Why? Because we're bullish and we want to see it stair step up these quadrants. All right. So yesterday, this right here is yesterday's price action. Right. At the end of Friday, we came back up to the lower quadrant, stayed there. Right. Once we got above the lower quadrant, right, stayed above it, used it as support. Right. Got above the equilibrium, used it as support. Right. Then we came back up, poked above the upper quadrant into the order block. Then we pulled back down, coming back toward equilibrium, coming back down toward a discount. All right. Now, let's put today's price on, and I'm just going to leave yesterday's dealing range on there. Right. I'm just leaving it on there. Why am I leaving it on there? Because it is an algorithmic dealing range that we're still within. Remember when I tell you, you ain't got to move your 20-day look back every day. You ain't got to move your dealing range every day. As long as you got a algorithmic level on your chart and price is near it, it will consider it. It will keep it in mind. It will refer to it. Right? So I didn't move anything based off of yesterday. And look at what the algorithm did. Right? What did I say? I said, when we came to that upper quadrant, what do we want to see price do? Come back down to equilibrium, maybe come down into a little bit of a discount. We got an order block down here. So just allow for price to come down here if you want to. Right? Come over here at London. What did price do? Drop down. Where did it go? Below equilibrium. Took out the Asian low. Right? Took out the Asian low. Then start to rally up. Right? Got almost there during the New York morning session. Stopped, making relative equal highs. Then it pulled back down to a very particular spot. A very particular spot, right? What did it pull back down to? It pulled back down to that hourly SIBI right there. Right? Why did it pull back down to that hourly SIBI?
Because that was the first gap when we
Christopher,
went down.
hold on for 1 second. Hold on for 1 second. All right, go ahead. What you're saying now?
It's that reclaim inversion gap, but it also sits at that 25% or 75% level. So it makes it a high probability.
All right, so yes, all the above, right? So that's that first, those first that Michael tell us about, right? That first civvy there. You say, Tim, but that civvy, when it's the first, but we didn't drop down and take out that sell side right there. Remember, Michael, what did he give us? He gave us some enlightenment. That first imbalance after a turtle soup, right there, gave us a little bit more intel about those first, right? So that's that first there. So if you're bullish, right? If you're bullish, you want that to be used as an inversion, right? You want that to be used as an inversion, okay? And if you're bullish, right? Not even if you're bullish. What is this right here? What is that right there? Those consecutive down close candles right there.
Order block.
That's a bullish order block, all right? That's a bullish order block. And where is this inversion fair value gap resting at inside of that order block? In the discount or the premium? Where is it resting at? That inversion fair value gap, where is it resting at? In a discount or the premium?
It's in the premium, kind of just right at the center of it, but in the premium.
It's in the premium, right? And where did Michael teach us that our best longs are going to be if we're bullish? They're going to be in the discount or the premium of an old PD rate.
The premium, just tap it and go.
Yes. So you have a first imbalance after the turtle soup, before going down handling business, then coming back and getting this change in the state delivery, right? So it makes it a high probability inversion fair value gap. It's resting in the premium of this bullish order block. So when we get above that bullish order block, the best longs are going to occur in the premium of that bullish order block. That's why we be looking for the most sensitivity in the wick, right? Because your best longs are going to come from the premium of that old PD array, where in the wick right there. Your best shorts are going to come from the discount in that wick right there. If you go up there and touch that, you want to get it. You look for that sensitivity right there in that breaker, in the wick of that breaker, right? You're looking for that sensitivity there, right? And what does price do? Come down, gets below the midnight open, right? Gets below the midnight open, and over here, these hourly candles, so I don't know exactly where the 9:30 open is on this right here, but we do get down below the midnight open into that first, right? And not only do we get into that first right there, right? What other first do y'all see that we trade back down into right here? The algorithm like to do this thing called confluence, right? What other first do y'all see on this chart right here that this trades down into right here? What other first do y'all see?
That's the first hourly fair value gap of the session.
Right here.
Where? Let's see.
Right there. What's that right there? What's that right there? You see this here?
That's another order block.
Right here. When price dropped down right there.
That Sibby, I see a Sibby right there.
Yeah.
Oh,
You got a-
inversion.
You got
Oh,
that
yeah.
SIBI right there. The first one before we dropped down, took this liquidity, came back, got that change in the state delivery. Ain't that's the same thing as this? That and that are the exact same thing. That's a first before that change in state delivery, handling business. That's a first before that change in state delivery, after handling business, after a turtle soup, after a turtle soup, during a kill zone, during a kill zone. Right? And if I was to just take a little block, do it like this, and stretch it out, stretch that up right there. Institutional order flow entry drill. Hey, but right there, institutional order flow entry drill inside of that SIBI right there, inversion fair value gap. Now, not only did it, that's in. Remember I told you, the algorithm like to do this stuff called confluence. Loves to do it. Don't know why, but what is this right here? That red candle right there. What is that right there? What is
Bullish order block.
that? That's a bullish order block. And where do we trade down to right here? We traded right down into the premium of that bullish order block. Where we look for the sensitivity at? Right there. Right? During low resistance runs, we're looking for that sensitivity in the premium of old PD arrays or the discount of old PD arrays, depending on if you're bullish or bearish. You're looking for that. Oh, it's hot. I got to get up off it. That's what you're looking for. Right? So we look in there. PD array never goes stale. That was on there from way back when. Right? Created a new PD array in confluence with that. Right? Traded down. Consequent encroachment of that old one. Institutional order flow entry drill of the new one. Hot potato off of the bullish order block. And after that, nothing can stop me. I'm all the way. Took out the liquidity. Right? And that's on the hourly time frame. Okay. Now, and that's based off of just still looking at price, right? Based off yesterday's dealing range, right? What a dealing range from Friday. And what do you notice about what price did? Once we set that low, we stair stepped up the quadrants, right? Touched it, used it as support, touched it, used it as support, right? Deeper retracement, got above it, used it as support, right? Stair step this way up the quadrants, right? And that's based off of Friday's dealing range, all right? Then, see here. Where is it? Oh, there it is. Tweak. Right? This is our dealing range from yesterday, right? So we open up price here. Right? Remember, we had expanded up here, and from this high to this low, right? We're looking at everything coming this way. We traded back down, come down to equilibrium, right? Notice all the bodies of the candles respecting equilibrium there. Did not take out that low, right? We traded back up, right? Once we got above that upper quadrant, right? Notice here, remember that PD array right there, right? That's that first. What is it in line with? That upper quadrant. Where are we looking for high probability trading opportunities based off this dealing range at these quadrant levels, right? That's what we look for, our high probability trading opportunities, right? They're going to
Okay,
rest inside here. All right. And
Tim.
then, yes.
Okay. So basically it's just like you said, it's just starting to stack everything together. So even though we're in that dealing range, because we are on that side, it's not necessarily coming. We already came back down to the discounted equilibrium. So from here, we start putting a stack on the rules of like those inversion gaps and hitting it and go if we're still bullish. We're not necessarily saying, oh, it needs to come back down to a discount, or do we shorten that range to, so to speak, determine a discount? Does that make sense?
You always focus on the latest expansion of the dealing range when you're looking for your trading opportunities.
Okay, makes sense. So
you
once it
always
hit that equilibrium and expanded away, now we in that range and we're looking for it. And in fact, if we look at that expansion range, it came back to that discount and then took off again. Okay.
because what do we always say, right? We always want to identify the manipulation, look at where the trap traders are, look at our balanced price ranges, all of that right there. All right. So when price dropped down here, right, and we got our nice little V shape, right? Like to see those, because what's below that low right there? Trap traders are down there. Oh no, we're trapped, right? Trap traders down there. So you don't want to see price coming back down there, right? You don't want to see price coming back down there. So as we open up here, price is not trying to go back down there, right? We come up here and we offer a whole lot of back and forth, right? And then we start to move away, right? So if we come, right, from our order block right there, right, from our order block there, as we start to come back down, right, we come down, right, into a discount, right, enter our order block right there, and we're respecting that order block right there based off this expansion right here. So now price is not showing a willingness to want to come back down. So we've already come down into a discount based off of this right here. Okay. So then we're still inside of that range, right? And the only thing we do is drop down and take out liquidity. So, right, we come up here and we expand up there, right? Once we expand up, right, we come back down into our, right? So we're looking for trading opportunities over here. When we leave this balanced price range, here's our order block, there's our range, right? So we said we're always focusing on our latest expansion of our dealing range, looking for trading opportunities. Come back into a discount, bullish order block, bullish breaker, inversion fair value gap, right? go up. There's your trading opportunity here based off the latest expansion of the overall dealing range right there. Right. So from here to there, right? Only thing we did was keep extending this dealing range up, right? But this is the latest expansion. Well, this here, because this you can count this too, because that's the low to the high. But when you're looking at, okay, this is the balanced price range, I like to just go from the order block up, right? And then we come back down into that discount right there on the latest expansion. Right? So we're not looking for it to come all the way down to a discount for this entire range right here. You're not looking for that, because the algorithm is giving us all these different signatures that is done with all of this price down here. Make sense?
That makes sense. So you're keeping it for the, like you said, for the confluence of those quadrants though, because it's still within that parent range. But the expectation is that we're done with that area and we start having inside price range, dealing ranges from that area, from those other areas.
Not really inside dealing ranges, but we're just focusing on the latest expansion. Right? You're focusing on the latest expansion for your trading opportunities. You're not looking back across all this, because from here to here, we already came back and offered a discount, right? So from there to there, we offered a discount. So when we break out of the top of here, it would be unreasonable to try to come back and offer a discount all the way down here. You see what I'm saying? Because we've already come up and offered a discount here. So we come up and manipulate this low and expand away, we're done with all of this area right here. So you don't want to see price digging all the way back down here to come back below this area to get offer a discount, because we've already done that here. You know what I'm saying? Because this is anchored from there to there. And you can see we already offered a discount on that pullback right there. Right? So once we manipulate the low here, that low is protected. Right? Once you manipulate that low is protected. Remember what we said about institutional sponsorship? When we see a move to a discount or sell side with evidence of buy side left in the market up there, the smart money has sponsored the move. So if they're sponsoring the move, that sponsorship is what? An investment. So they're going to protect that investment. They're going to leave things in the way to protect that investment. Order block, breaker, inversion fair value gap. They got stuff in the way to protect that investment down there. They got a sponsorship on the line. So they got to protect this investment. Got long here, got a place to offset. Got long here, got a place to offset. Right? Because we want to see what? A move to a discount, or a move to sell side liquidity and a discount in this case, and then a move to discount, right? Same thing, institutional sponsorship, a move to discount, evidence of liquidity in the market above. Move to discount, sell side liquidity, evidence of liquidity left in the market above. All right. And on a 15-minute chart, right, come back over in the same spot. That's the same drop right there. Except this time, we're looking at the first imbalance on the 15-minute chart. Right? When we come all the way over here, where the price trade down into, right there. And then we come right back there. Is that the same thing? Is that the first imbalance right there? Outside of this area there. Yeah, there's a small little inefficiency there, but this is the first fair value gap right there. That first presentation after that turtle soup, right? 15-minute, 15 minute. Remember, it was a 60 minute and a 60 minute. Algorithm love doing stuff like this. There's a bullish order block right there. You love doing stuff like that. Right. And then in this case right here, we even got a bullish suspension block right here. Added a little bit extra on the 15-minute time frame. Right. He wasn't even there on the 60-minute. Oh, wait a minute. Yes, it was. 60-minute had the same thing. I lied. 60-minute had a bullish fair value gap too. Sorry, 60-minute. Right. Had a little bullish fair value gap there too. Right. Bullish fair value gap there too. Man. How you know? How you know? How you know? Then come back down. Institutional order flow entry drill off of that old stale PD array. That thing there was made at 12:15 p.m. on Monday. Right? Then we drop down into it here. Boop. Poke that. Then we rally up all the way back up to the buy side. Man. We had some stuff on the 5-minute too, didn't it? Had some stuff on the 5-minute. Oh man, that's that same little area over there. Oh my God. Oh my God. I'm getting so tired of that little area right there. Yep. There it is again. That first 5-minute fair value gap there. After that turtle soup dropped down, first 5-minute fair value gap. Right. Once we came down there to equilibrium, right? And you can see, oh, it looked nice here. We generating relative equal lows there. We do got a relative equal low over there too. Right? At their equilibrium. After the day open up, and then we rally up, and oh my goodness, what do we stop at? Right there. I wonder why I went up to that 5-minute fair value gap right there and just throw it on breaks like that. I don't know. All right. And once we went up there and throw it on breaks like that, and then let's see, we come back down here. We work our way down. Right. Got this large suspension block right there. Right there. Yeah, after we leave this balance price range there, got this large suspension block right there. After we leave that balance price range up there, we go up, we come down, leave that area, suspension block right there. All right. And we come down here, sweep liquidity. All right. Once we sweep liquidity, come back up to the suspension block. Right. Take out that buy side, drop back down here. Right. Take out that sell side. And then as we come back up, got some sloppy delivery up in here. All right. Very sloppy delivery, but look here. Once we close back above consequent encroachment of that right there, no more bodies closing down here. Right. Close above, drop down to the low of it inside the fair value gap. Right. Drop down into the order block. Right. Come back up, close back above it. Right. Trade up, take out the daily high. Right. Pull all the way back down to guess where? Right. Right there. Right there. Remember that suspension block we talked about? That first one there, after leaving that range there. Right. Hit that, and we come back up. Right. Use that one. That old used up one as support, the one that we used as resistance there. This is true support and resistance. Right. True support and resistance, because we got right here. Right. Used it as resistance. It came back here. Used it as support. Right. If you look here, came up, pulled back down into the rejection block. Right. We hit the rejection block there. Pull up, hit the rejection block there. But you notice, right? Ain't no candles closing outside of this range right here. Right. All of it, we just soaking up a bunch of liquidity inside of this bullish suspension block right there. And then once we get over here, where time meets price, right? This is the 1150 candle. And all the way over here to the 1010 candle, when time meets price, look at how price started respecting that inversion fair value gap, right? All of that wicking back and forth, back and forth, back and forth across it, right? 1150, poke up, we drop down, close up there, drop down right at consequent encroachment. Then nothing can stop me. I'm all the way up, right? Go above the high, consolidate, then poke into the buy side up there, right? And it's all based off of all these old stale PD arrays that was made, right? Down there was the first. Then these right here, when we look at it, these are being created based off of, right? Where we at here? This is the new daily dealing range, right? Right, new daily dealing range. Where is that suspension block created at? Right there on that upper quadrant, right there, right? Then once we drop down, sweep this liquidity, right? You can already see right here it's using the equilibrium right there, bounce off of it, right? Come in here. Then once we get back above that upper quadrant, go take that out, come right back down to that civvy that's in line with that upper quadrant, right? What did we say? We're looking for our trading opportunities right here. Where's all the trading opportunities inside this range? Right there between that equilibrium and that upper quadrant. Right? Understand why you putting the PD rays on the chart. If you put it on the chart, have a very specific reason for why you put it on the chart. And then when time meets price, let's watch the magic happen. Watch the magic happen. And right there, we did not get below the 930 open. Came very close to it. We got below the midnight open. There's the 930 open right there. Drop down, right? Just below that. Did we get below that order block? Yes, drop just below that order block right there, right? Came down into that high probability inversion fair value gap right there. Right. And then there was another, I think it was like a first presentation from sometime. Look at my 1 minute chart. Yeah. So that's that's just a busy from 944 fair value gap after we left this range here. Right. That's the fair value gap I'm watching right there. And you notice where's the bulk of the price action inside of that suspension block right there after leaving this range, right? Because this is the fair value gap. So we're doing most of the trading, most of the liquidity building inside of that fair value gap, right? Yes, we do have a suspension block down here, but that's inside this range. So that's just a common gap, a regular buy side imbalance right there. But that right there is your fair value gap, right? And then since we got higher time frame PD arrays that's resting down here, right? What you got to allow for price to come down there to it, and it does. Wicks down there to your higher time frame PD arrays, rally back up, and then this right here, that's the first presentation after 11 o'clock right here, right? And then remember what Michael said about studying the relationship, right, between the first presentation based off displacement and then the first opposing fair value gap based off displacement, right? Look at this right here. This is our first presentation, right, based off displacement. So this is 11 o'clock right here. So 11 o'clock, we're coming down, right? Yeah, there might be a small imbalance there, but that's not based off displacement. But when we displace away, right, there's your first presentation after 11. Then as we come back here, there's a small imbalance there. But once we start displacing past this range right here, right, so we came all the way up there to the high with this large moving candle, then move out. That right there, that's the first opposing imbalance right there. That suspension block right there. Look how it supports price. As we come back down, touch that first presentation, come back down, touch that first. These lows right here are exactly equal. So it dropped down, institutional order flow entry on that first presentation. Look at how this first opposite presentation here is just supporting price, right? When we're leaving this little area down here, supporting price. Talking about looking at the relationship between that first and that first opposite right there. Beautiful. Beautiful. All right. I think that's all I got, man. I think that's all I got. I don't know what this is for. I can't remember what I marked that for. Yeah. Yeah, I think that's it. Do anybody got anything for me? Do anybody got anything for me?
And you going over this every day, and it is sinking in. But like in the moment when trading, sometimes, so you kind of, early on get flustered. So do you think it's a good idea to kind of have a few notes by you? Nothing wrong with that, right? Like
It's
a
always good.
reminder
It's always good to have notes. Always good to
Yeah.
have notes to remind you of what you're looking for.
Yeah, those bullet points. Like again, that was a good refresher of if you're looking bullish, then you, even on that order block, you want just to hit in the top half, the premium of it,
Yeah.
and not get confused.
Until you've done it long enough to just understand it like verbatim in your mind. Ain't nothing wrong with having notes. Have your notebook. Right, open your notebook up. Right, grab your notebook. Boom, boom, boom. You know what I'm saying? I'm looking at this model of I'm looking at, you know what I'm saying? I'm trying to trade off of breakers, or I'm trying to trade off whatever, you know what I'm saying? Whatever you're trading off of. Oh, there it is. All right, boom. How your notes sitting there so you know just what to look for. You know what I'm saying? Or just go over your notes before you even open up the chart. Because you should know what your game plan is before the market even open. You know what I'm saying? And then just go over your notes. And if you make a little I see Tanya do this all the time. She'll come over there and she'll make notes on the screen. She'll like put a text box on the screen and say, do not try to short until this level is taken. Look for 5-minute displacement. She make like little notes and just leave them on the screen right there. So while she's looking at the charts, she know exactly what she, not supposed to be doing. And you can, you can use the notes for anything. Cause like you say, in the heat of the moment, when them candles just moving around, you know what I'm saying? C-Walk ain't the only one that be just jumping into trades. And then once you get in, be like, God dog it. Man, I think ain't even did that yet, man. And then you get on that hope. You get out there on, I wish. It ain't working out for me.
Yeah, I'm guilty of the thing today. I'll be like, surely it's gonna pull back more, trying to make it pull back. So just as guilty. And so as soon as you see it turn, I did it in the morning. It hadn't even broke structure, but I saw a gap and I was like, oh yeah, it's time. because I had convinced myself that
Yeah.
baby we was gonna do that. So I understand.
Yeah. It always you gone, Lorraine? All right. Lorraine said happy Tuesday, everybody. I think she gone. But we all do it. We all, it's like price just be running off and we be wanting to take a trade and we be like, well, I ain't gonna chase price. So it surely gotta pull back. You know what I'm saying? I ain't gonna chase to the downside. It got to retrace up. I ain't gonna chase it up. It's got to retrace. You know what I'm saying? And we just try to jump in and force what we want. And the worst thing that can ever happen to you, and it's to happen to me before, for you to jump in and force something and it work out. If you jump in and force something and it work out, oh man, that make you feel like you the man of steel or the woman of steel for real. Oh, it worked last time. I don't care how many times you get your head buzzed, you're gonna always go back to that last time that it worked. You batting 1 of 8, but you still doing it because it worked that last time. You done wiped out your memory. Them other 7 times you lost, you just remember that last time it worked. All right.
Nah, it messed up the bias, even, because I just kept saying, oh, we gotta have a pullback. So I kept saying, okay, not even bearish for the day, but bearish for the pullback. So it's unfortunately, which you learn, it messed you up for looking for long entries. Because it was just like, oh, it gotta turn. So
yeah, I think you described me too, man. I've been pretty good at picking daily bias, Tim. I've been pretty good at picking targets, kind of once price starts moving. But intraday trading is like you say all the time. As soon as that market opens, when I'm looking at it, squirrel, 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 another squirrel, a squirrel having a baby. It's like, yeah, it's just, yeah. So I'm trying to, so these sessions really help, man, because they give me something to discipline my eye, with and learn patience.
Yeah. Yeah. And I'll say this, right? For everybody that struggle with the same thing, and that's everybody, me included. You don't sit back and act like it ain't you. For everybody that struggle with trying to force the retracement, it's got to do this, right? Stop trading against the grain. Only trade with the bias / draw on liquidity. So only mark PD arrays if it's bullish that you're trying to buy off of. Only mark PD arrays if it's bearish that you're trying to sell off of. So that way, if price is not retracing back to a PD array you want to buy off of, you shouldn't even be trying to buy. If it's not retracing back to a PD array you want to sell off of, you shouldn't even be trying to sell, right? That will help you eliminate forcing trades, right? Now, what does that mean? That means you may not get a trade set up in the session that you watch. You may not get a trade set up the day that you watching, but it's going to eliminate you cultivating bad habits, right? It's going to eliminate you cultivating bad habits. Because remember yesterday when I said the price was boo-boo and I was like that gorilla and I thumped the turd away and I went to the gym. And then when I came back from the gym, right, it wasn't at the place where I wanted to buy or sell, and I thumped the turd away again. You know what I'm saying? But today, guess what? Price interacted with some spots that I wanted to buy or sell off of. And now I got the opportunity to push the button. Right. So limit. But Tim, you marked bearish PD arrays. I know because I want to buy off of those inversions. I was looking to buy off them inversions. Why was I looking to buy off them inversions? Right? Because the draw was up here. And so if I can get above these and buy off of them, right, I got plenty range to take my pound of flesh. Right? Plenty range to take my pound of flesh. Because the day is starting here. Right? The day is starting right there. So I'm anticipating if we get over here to my session that I watch, right? This is my area of interest where I want to try to participate, because based off what the algorithm did here, we should use this as support. And I had decided that way before it happened. Why? Based off of order flow and price delivery. Right here, smart money reversal. And this right here. Now that right there confirms this move here as the low risk buy. Right? Smart. We're anticipating this to be the smart money reversal. So if I'm anticipating this to be the smart money reversal, right, I want to see this keep going up. So once I get that manipulation right there, right, I don't want to see price coming down here no more. I want to see it keep going up. So if I want to see it keep going up, what do I want to buy off of? Right? A bullish PD array in line with an inversion, in line with a bullish. Is that right there not a unicorn model right there? Right. Blow this up a little bit bigger for you right here. Right. For those who don't know what a unicorn model is, right? A unicorn model is when you have a breaker in line with a fair value gap right there. So price came up, made a high, a low, a higher high, taking liquidity, right? You want to understand what is it doing? Is it doing all the things to qualify as an ICT breaker, right? The narrative is bullish. Okay. The narrative is bullish. We come up, we set a high, we drop down, manipulate sell side, rally up, take out buy side. There's our bullish breaker. As we displace away, we create a fair value gap. As we break structure, right there in line with that bullish breaker, we trace back down into the breaker. In this case, into the inversion fair value gap there, inversion fair value gap there. What does Michael teach? If there's an inversion fair value gap inside your breaker leg, the better opportunity is not at the high of the breaker, but at the inversion fair value gap. There's your opportunity at the inversion fair value gap, institutional order flow entry drill, maybe 1 or 2 ticks of heat before going up. Perfect unicorn model right there. Right there at a place that was identified 17 hours before it happened. How did you identify that 17 hours before it happened? Order flow and price delivery. Because we're in the buy program, because the draw is there, because that's the first imbalance after a turtle soup. As we drop down, completed something, got this change in the state delivery, the algorithm should use that as an inversion fair value gap. That's the first imbalance after a turtle soup, after taking liquidity, coming back, getting change state delivery. The algorithm should use that as an inversion fair value gap. Oh, they happen to line up. Oh, they happen to line up on a quadrant line. Oh, they happen to be in confluence with a bullish order block. Oh, it happens to be a fair value gap, which makes that a unicorn model because there's a breaker there also. Whole bunch of confluence right there at a PDub rate that was identified 17 hours before it happened. Only execute at the places where, for the next 3 months, only execute at the place where you say, this is where I want to look for trading opportunities based off of this buy program or sell program that we're in. This is where I want to participate. And when time meets price, it don't matter if it get there and it's not time, don't do nothing. But if it get there and it's time, execute. Do that for the next 3 months and weed out those bad habits. Weed them bad habits out. It ain't gonna never happen for you. It ain't gonna never happen for you unless you get it. You look in the mirror with yourself and do the same thing Yolanda did tonight. See what? If you don't say, hey, this is my problem, this is what I'm doing, it ain't gonna fix itself. You gotta fix it. You gotta fix it. You can sweep a whole lot of stuff up under the rug, but if you don't fix them bad habits, that buy and sell button gonna bring the truth up at you. That buy and sell button relentless. Please believe me. Please believe me. G-Ferd, did I answer your question that you had sent me, or was I off topic? I mean, off base. Okay. I take your silence as a yes. Hey, that's all I got, man. If all hearts and minds are clear, we're going to call it there. Tomorrow's Wednesday. The first tape reading stream of the year, I think. Is this the first tape reading stream of the year? First tape reading stream of the year. Right? Who supposed to be volunteering? Looking for the mute button.
I got it.
You got what?
You said volunteer. I'll volunteer.
Oh, you got it for tomorrow?
Tomorrow? Is tomorrow Wednesday? Okay.
Yeah.
Yeah, I got it for tomorrow.
I just sent you something to say unmute G-Ferd. G-Ferd say looking for the mute button. It should be like a little microphone.
Hey, you hear me?
Yeah, I hear you.
I appreciate you. Yeah, no, that answered the question, man. That's pretty much what I was looking for. It kind of makes sense. I guess I've just been really trying to find out, mainly because I'm doing swings and leaps. I guess I was trying to just be too specific, but I think you cleared it up with your response.
Okay.
So it should be good. But if I have anything else, obviously I'll just hit you up.
All right.
Appreciate
All right.
you.
No problem. I'm glad I could help. Yolanda, you gonna share your screen or you just gonna talk off mine?
I'm gonna talk off yours. I got too much stuff on mine.
No. Hey, walk it like you're talking now. Go on and share your screen and talk off your own. You ain't got to worry about what's on the screen. You can share. I mean, if you want to talk about, because it's easier if you just clicking buttons on your own. But like, cause you be like, oh, go to this time frame. Oh, go to that time. Then I got to be wholeheartedly paying attention.
Okay, I'll share my screen.
You know what I'm saying? I might want to just sit back and kick my feet up on the desk. That's what I might want to do. Hey, shout out Yolanda, volunteering for tomorrow, do the tape reading. It's 2026, man. We sprinting now. It ain't about being right. It ain't about being wrong. It's about doing it. It's about doing it. You can sit back and listen to me talk and be like, oh, I see it. Oh, I see it. Oh, no, if you don't do the work, I don't care how many times you can sit in the back seat of a car for 15 years and watch somebody drive. But until you actually get behind that steering wheel, you don't know what it's like to drive. So sitting there, listen to me talk about it every day. Yeah, it's nice refreshers. But if you ain't doing the work, if you ain't sticking to what we talk about, right? And trust me, it get hard. When them counters be moving, especially when they moving fast. When them counters moving fast and they stretching out like long limousines, you like, man, I could have been in that trade. Man, I could have been in that trade. You done forgot all about what you marked on the chart saying, I want to see price do this and then it's gonna come back and then I'm gonna do no. Man, price take a pound. You running behind it. Wait for me. All right. Why? Because we ain't putting in that work for real. Right? We ain't putting in that work for real. We going out there and getting lucky. And when we get lucky, we think luck equates skill. Luck don't equate skill. Ooh, I learned that hard way. Yes, I did. Luck do not equate skill. Right? Perfect practice is what like makes perfect. You can practice wrong. Right? But if you practicing the right thing, if you walking it like you talk it when you go out there and start pushing buttons, if you practice like you play and play like you practice, yeah, sure you're gonna take losing trades sometimes. Because sometimes we're gonna get wicked out, right? We might think we see the manipulation and then we end up being manipulated. Or they may double manipulate. You know how many times the NQ will drop down one more time for good measure? Love to do that. Love to do that. That's why it's so important to remember time first. It's so important to remember time first. Wait until time meets price. All right. That's all I got, man. Appreciate y'all for hanging out with me. If this is your first time tuning into Tim's Tidbit, thank you, man. Hit the like button. Share it with somebody. Subscribe if you ain't subscribed. You know what I'm saying? I see SJ in the building. What's going on, SJ? All right. Good night, Lorraine. I see Michelle popped up in here. Shout out to Michelle. I see Jada slid up in here. Couple people pulled up after I hadn't shot everybody out. Your picture blocking the line. My bad. That was an hour ago though. Hey man.
Thank you, Tim, for going over things.
You're so welcome, Jada.
I'm learning the patience thing and waiting for alignment because, yeah, I've definitely blown many accounts. So it's a new season for sure and learning to wait for those specific time and price to meet.
Y'all notice the theme we've been on lately? I've been doing themes over the last few months and stuff like that. I've been doing themes. Y'all notice the theme we've been on lately? We done got back on them dealing ranges and we looking at the quadrants of them dealing ranges, looking at the high probability areas of looking for. That's what we've been focusing on, looking at where to anticipate my opportunities. Because guess what? Come here, microphone. It's a secret. Y'all come here. I don't want nobody here. Y'all come here. Come here. Uh-oh, that's far back. Come here, microphone. Microphone. Hey, let me focus on myself. Get my focus together. All right. There I go. So, microphone. Okay. No matter how much you think you know the concepts, no matter how many PD arrays you can identify, if you don't know when and where to be looking for an opportunity to push the button, meaning get into a trade or get out of a trade, you are just gambling. And that magical Fibonacci tool can show you exactly where you want to be standing at the bus stop waiting for an opportunity. Will you always be standing at the right bus stop? No, you won't always be at the right bus stop. Will the bus always come during the time when you're standing at the bus stop? No, it won't. But if you know where to stand to be able to get on the bus, you know when you should not be trying to get on the bus. Let that marinate in your spirit. And with that, I'm going to bid you adieu. If you don't understand what I just said, you're not ready to push buttons anyway. Hear me?
Man,
So,
straight gems, Tim.
So, I got to do it from a visual people too, right? Because I'm a visual learner, right? I'm a very visual learner. I can't leave my visual people out. Get off my screen. All right. God dog it, I did it again. All right. For my visual learners, right? There is a tool. Blank everything off this screen. I'm just going to delete all this. I'm done with all of that. Yeah. I'll delete all of that. Hide that. Turn all of that off. Turn all of that off. All right. So in your tools over here, right? Come one, the people on the vertical thing probably can't see it. So I'll do it like this. Can you see that? Yes, you can. Sorry, y'all. All right. So over here on your menu bar there, all right, if you come like 1, 2, 3 tools down, right, come 3 tools down, and inside those tools, there's a Fibonacci retracement tool, right? At the top, it says Fibonacci. These are all the different type of Fibonacci tools. And then at the bottom, they got the Gann boxes. These are all kind of Gann tools. So the Fibonacci tool you're looking for is the Fibonacci retracement tool, right? And you say, Tim, why am I looking for a retracement tool? I don't know. I ain't the one who made the tool. That's just the name of it, okay? So you can pick a Fibonacci retracement tool, or you can highlight the little star next to it and put it into your favorites toolbar. And if you come over here at the bottom, there's a little star right there. If you click that star and make it turn white, in my case, but if you click it and turn it turns on your favorite bar, right? And you can put your favorite bar wherever you want to put it. So you can either put your Fibonacci tool on your favorites bar, or you come up here to 1, 2, 3 tools down and look inside there for the Fib retracement tool. Okay. Once you get your Fib retracement tool, what you want to do, right? You want to find a dealing range that you're in, whatever dealing range you're in. What constitutes a dealing range? When price expands and takes out sell side liquidity, right? and it also expands and takes out buy side liquidity, right? So from that high that took out buy side down to that low that took out sell side, that's a dealing range, right? Because price expanded and took out buy side liquidity, and it expanded and took out sell side liquidity. So that is a dealing range, right? Once you get your dealing range established, right, you got the highest high and lowest low, right? What you want to do, you want to make sure inside your Fibonacci tool, you want to make sure that you have 0, you have 0.25, 0.5, and 0.75, and 1 highlighted with checks in them to show these ranges, right? You can make it whatever colors you want to make it. I don't care. I make mine different. Like I make my high and low black, my upper quadrant and lower quadrant blue, and my equilibrium red. You can make it whatever colors you want to make it, right? So once you do that, then it's going to give you these segments. I got mine dashed. They can be straight lines, whatever. Now, these segments is where the bus stops reside. There is a bus stop at the upper quadrant. There's a bus stop at equilibrium. There's a bus stop at the lower quadrant. This is for your overall dealing range, your higher time frame, if you will, right? This is for your higher time frame, okay? So if you're bullish, you're looking for price to get above your bus stop and then retrace back down, giving you an opportunity to get on the bus. You want to see it get above equilibrium and then retrace back down, giving you an opportunity to get on the bus. You want to see it get above the upper quadrant, and hopefully, if it doesn't run off on the plug, come back down and give you an opportunity to get on the bus. Now, if you are bullish, let me say this right here. If you are bullish, but the algorithm is not. If you are bearish, but the algorithm is not, this same Fibonacci tool can tell you something. If we're in a bearish dealing range right here, right? Remember, we took out the high, then we came down and took out the low. You say, I'm bearish because this is a bearish dealing range. We're in a sell program, right? Bearish dealing range. We're in a sell program. Bearish dealing range. I'm bearish. Okay. If you're bearish, right? And price, it's like you just know you're bearish. And price comes up here and price gets above this upper quadrant and forms supportive structure like this right here. When we go back, forth, back, forth, back, forth, back, forth, and then we leave that right there. What is this right here? Somebody tell me what that is right there. We go back, forth, back, forth, back, forth, and then leave it right there. What is that right there?
Balanced price range.
That's a balanced price range. So if you're bearish in this area right here, once price breaches this, it's going to just go up there and take out that high. So at that point right there, you know I'm wrong. Because look at this right here. When we came down here and made this, we was talking about we were bullish, right? Because remember, don't forget, we said we're looking for this right here to come back up, right? Because we want this to be our smart money reversal, and we want this to be our low risk buy for this market maker model over here, right? So we were looking for this to continue up, right? Look what happened over here. It never came to this bus stop right here, right? Once we got right here, it just kept going. It never came back to that bus stop. Didn't even give it a chance. Why? Because it's not bearish. Because it's not bearish. It didn't even give. Now, would it always not come there? No. It'll come back there plenty of times, give you a very decent entry, right? But it's not going to come from up here down there in a low resistance liquidity run. And if it did come from here all the way down there, it's not going to form structure and then break down, right? Even if it's a high resistance liquidity run that come all the way down here, it's not going to form structure here and then break down, because in that case, it's just going to come and take that out. And you're just on the wrong side. So when you're looking for trading opportunities, this is where you're looking for trading opportunities. There's a bus stop, there's a bus stop, there's a bus stop, right? And the way you utilize it, you got your highest high, your lowest low, right? And you're looking for it, right, after the high and low is made, right? So once you make the high, once you make the low, or vice versa, right, you're looking for it from that point on. You're looking for stuff to happen here. The algorithm going to create high probability PD arrays. You don't believe me? Go back through price and look at it. Go back through price and look right here. All I did was mark out the highest high and lowest low. And look on every quadrant line, there's a PD array resting there. There's a PD array, every quadrant line, there's a PD array resting there. This is how Michael tell you, I can tell you where my PD arrays are going to form before they form. There's a PD array resting there. Every quadrant, even at the high. There's your bus stops right there. If you ain't get something out of this one, I'm sorry, I can't do it. I don't know how to say it no simpler. Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing called price action, I hope y'all took notes. I ain't gonna leave this video up. I'm taking it down.
Man, this stuff works, Tim.
It works.
No. I'm
taking it down. I ain't saving no more lives in 2026.
No.
I don't care nothing about the YouTube ad revenue. I ain't saving no more lives.
Nah, Tim, we need to go back and watch it. I already got it marked out at 6:44. I'm gonna go back and watch it from there.
Hey, man. Look here. In all seriousness, this stuff works, but it ain't gonna work if you don't do the work. It ain't gonna work if you don't. It ain't gonna work if you just come to my live streams and listen to what I say, then go about your day. It ain't gonna work if you just go to Michael videos and listen to what he say and go about your day. It ain't gonna work if you tune in to your favorite YouTuber and watch them trade and then go about your way. You got to put in the work. You got to internalize. You got to, like Yolanda said, take some notes. Sit some notes next to your computer, right? Take some notes, put them on the screen. Understand what you're looking for. Understand, why am I putting this on the chart? If I'm putting it on the chart for this reason, if I'm putting it on the chart looking for entry opportunities, I'm not going to be on my entry time frame trying to push buttons if price has not, time and price hasn't met at that PD array where I said I want to engage with price at. All right. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Rogers, aka Aranya Grande. That just means big spot if you don't hablo español. Yo, y'all be safe out here in these trading streets, man. It's cold out here. Gone. Yeah.